Welcome back. Embassy REIT is the first management on the show. It reported a steady set of Q3 numbers. Company recorded a record 3.5 million square feet, while EBITDA margins came in flat. The CEO of Embassy REIT, Aravind Maiya, joins us now. Good afternoon, sir, and thank you so much for joining us here on CNBC-TV18. The first question, leasing volumes this time around has been quite strong. 3.5 million square feet of leasing this quarter. How does Q4 look like, and what is the full year target for FY25?
Sure, Vivek, thanks for having me on the show. I think it's been a great quarter for us, Q3, 3.5 million square feet of gross leasing, which is a record. More importantly, we achieved in 9 months, the full year leasing guidance of 6.5 million square feet, back from some strong leasing in the existing space, as well as pre-leasing in our under construction properties. In terms of, next quarter ahead, I think put together, we believe we'll be somewhere between 7.5 to 8 million square feet. But 2-3 other highlights I want to give. One is from an overall stock perspective and sector perspective, the SEZ overhang is off. So that's a big positive. Second, we as Embassy REIT had a sponsor overhang, that's also off. So all put together, a great quarter and good potential for growth in the next few quarters in the year.
Okay, got it. Mr. Maiya, thanks a lot for joining us. This is Pavitra. Since you were speaking about the SEG changes, can you just take us through what the current vacancy levels are like right now? And do you expect any further decline on account of these changes that have been announced on the SEZs?
Yeah, Pavitra, in terms of full portfolio, we are around 84% occupancy. But if you were to split this between SEZ and non-SEZ, SEZ is around 78% occupancy and non-SEZ is 92%. So basically non-SEZ is strong. In terms of SEZ regulations, they've allowed us to demarcate floor by floor and lease it as if it's non-SEZ. So that's a big positive. We believe that in the next 2 to 3 months, a lot of our space will get converted to what we call as non-processing area, and we'll be able to lease that as if it's a non-SEZ space. So that's a positive.
Okay. Also, like you mentioned, just around a month ago, you did see a large block deal where Blackstone exited, and you've seen some marquee names come in there. So what has been, the conversations that you've had with, some of the new incoming investors? And secondly, in terms of FY24, what will be your payout, and what is the kind of guidance that you're giving in terms of payout for FY25?
Sure. I think the investor base is, I would say, one of the best. We have 92% non-sponsor holding, some of the biggest names in our book. Across, I think some of the feedback which these investors are giving is they love our assets. We, I think, own some of the best commercial assets in India and probably across the world. We had some of investors visiting recently who said, these parks look like anywhere in Singapore or US. I think that's a big positive. Secondly, all investors are looking for is growth in the distributions. And at a big picture, Vivek, while we are yet to give guidance for FY25, we believe that the distributions will grow next year. In terms of this year, we have given guidance in the first quarter itself, DPU ranging from 20.5 to 22 rupees. And we believe we'll end the year somewhere around the midpoint of that guidance.
Okay, got that. Since, we are talking about the outlook, take us through what you're expecting on the rentals as well. Also, what was the rental growth this time around? And what do you expect it to look like going forward as well? Because we do understand that there's not much fresh supply, right, which is coming in.
Yeah, 2 things, Pavitra. One, if you look at market per se, I think the rentals have grown anywhere between 3 to 5%. Again, depends city by city, micro market by micro market. But what I want to highlight is because of the premium nature of our assets, we typically end up leasing much above market. If you see some of our assets in Bangalore, we tend to lease anywhere between 5 to 8% above market. Second statistic which I want to leave with you is, again, in terms of Manyata, which is our largest asset, if you look at the last 18 to 21 months, we've been able to increase our in-place rental by close to 25%. So I think that's a very positive sign for us.
So a lot of what you do depends on how well, especially the IT sector does. And so how are you seeing feedback in terms of clients, especially when you're trying to go ahead and increase rental rates over there? So how is that particular market performing? And especially when you're talking about Manyata, FY25, will we see some increase in rates coming in from that particular asset?
Yeah, 2 things over here, Vivek. One, from our tenant point of view or customers' point of view, there's been a big shift from IT to what we call global captives. IT sector was around 25% 4 years back in our portfolio. Today, it is less than 12%. Global captives is in excess of 60%. So all the new space is being taken up by global captives. And the good thing about global captives is they want the best-in-class assets. They don't mind paying premium rents. So achieving the mark-to-market or above-market rental is not a challenge with global captives as long as our asset is best-in-class. And we believe even in the next year, we'll be able to get these premium rental. And if we can take another 15 seconds more in terms of growth, other than increase in rent, right? We have 35.8 million square feet already completed assets, occupancy at 84%, which we believe will go above 90% in the next 12 months to 18 months. Number one. Number two, we have 6.9 million under construction. 90% of that is in Bangalore. And if you take the next 24 months deliveries, we've already pre-leased around 72% of that space. Again, big growth, which we can expect from the under construction portfolio as well.
Well, thank you so much for your time here and giving us, so many insights into the industry. But now, it's time to move on. It's now time to shine a spotlight on the backbone of our economy, a celebration of your impact on India's success story. CNBC-TV18 and HSBC India proudly present India's biggest SME awards platform, honoring the small and medium enterprises that drive our nation's growth. Nominations are open now, and we invite you to become an SME champion. Your dreams power India's progress, and it's time to celebrate them. Scan the QR code now and be part of this monumental recognition at the SME Champion Awards. It's not just a platform, but an opportunity for you to step into the limelight.